What's up, everyone? Welcome back to the trading world. Today was August 19th, 2025. It was a No News Tuesday. And before we get started, guys, we need to give a shout out to FA. And I'm not even going to say anything. I'm just going to pull up the screenshot. And I'm just going to sit here and say nothing. Genuinely, what the heck, FA? If you guys don't know who FA is our friend in our Discord server, and he's from Russia, as you can see by these characters down the bottom left, and he just made $120,000 in one day. FA might actually be one of the greatest traders of all time. Like, I am being so serious. Like, this is insane. FA, dude, you're a goat. I don't know. I just had to give FA a shout out because this is just crazy. And I mean, just what a crazy thing to send in the Discord, guys. It's just $120,000. And the crazy part about it is he's like, last week he was like, yeah, guys, so I'm going short, and and he's like, I'm not having a stop loss. And all of a sudden this week, he's just like, oh yeah, by the way, I top ticked this. And it went all the way down here. We love FA. FA is the GOAT. Anyway, guys, let's jump right into the charts. We got a lot to talk about today. Well, maybe. We'll see. Wrong screen. That's also the wrong one. Okay, so going into today, for bias, one way you could have had bias figured out is, well, we had a daily CRT, meaning we sweep out this high of this original candle. So this second candle closes back within this original candle's range, meaning this candle low is a decent draw on liquidity. So you can see I have that line marked out, dotted down there. And so that I was definitely considering that as a possibility. It did end up happening. And then if I jump down to the lower time frame, you can see that we had really extreme high resistant liquidity conditions, meaning instead of low resistance liquidity where we actually run and just cut right through all these highs, right? I don't know why it's not letting me draw this. Low resistance liquidity would be, we're going to cut right through all these highs, right? High resistance liquidity is every single time we push up against this trend line, we fail to break it. And in high resistant conditions, when we come up to that trend line, a lot of time we're going to come back for that old low below the trend line. And so you're like, well, this looks exactly like low resistance liquidity. Okay, low resistance liquidity and high resistance liquidity, they look exactly the same, but the difference is this doesn't become low resistance until we push into some higher time frame key level, get an obvious market structure shift, and then all of a sudden start to drive back up towards those highs, right? Now this is on the other side of the curve. Now this becomes low resistance liquidity, right? But right now, right, it's high resistant, meaning every single time we try and go and break this trend line, every single time we come up to it, we're failing. So this is high resistance liquidity. And what high resistance liquidity also means is every single time we come up to that trend line, we're going to come back for the old lows, right? So going into the morning, if I remember correctly, I was looking at this and I was like, yeah, this is really bad high resistance liquidity. We're most likely going to get rejected here. And another reason that I thought we were going to get rejected is you can see that we had this new day opening gap here that was also perfectly, once again, you can literally see new day opening gaps, by the way. Look at that. The new day opening gap is the gap between the open of a new day and the close of a new day. And you can see if I drag this over, right, it's going to be very, very sensitive later on. Well, if it'll let me drag it over. Here you can see this is very, very sensitive later on. And we go lower off of this. And it is also right within, this high resistance liquidity trend line. So with all that in mind, I was like, okay, it's definitely seeming like we're not going to go run this liquidity right now. And we already had this as a possible draw on liquidity. So going into the day, I was definitely leaning bearish because we kept failing to break this trend line. And then what kind of confirmed the bias to me was when we came up, swept out this high, and then you can see we got a 15-minute break of structure right here. And this really was like the light bulb in my brain, like, yeah, we're going to go lower here. And that, yeah, the previous day's low is likely going to be the draw on liquidity. This was previous day's low, I'm pretty sure. And so from here, right, I'm bearish. So I dropped to the lower time frame. What opportunities do we have on the lower time frame? Well, all this is pre-market. I will go over a couple opportunities that maybe you had, right? Once again, this white line, that was our original draw on liquidity, which is previous day's low. If I pull up this chart, this indicator here, it's going to tell you, right? This says previous day's low right here. So this was a really good this is a really nice draw on liquidity. And what happened was on market open. So if I didn't see this opportunity on market open, but in hindsight, I want to note this opportunity for you guys so we can keep getting better, right? In hindsight, we had previous day's low here. We already were saying we're likely going to be bearish. Once again, we're within a higher time frame sell model, right? 1 hour. So we're within a 1 hour for value gap. I forgot to mark this out, but we were within a 1 hour for value gap. And then what aligns with the 1 hour? If there's a 1 hour key level, that aligns with a 5-minute change state delivery. So liquidity sweep here. 1 hour for value gap. And then 5-minute change state delivery. So I had this marked out as a sell model. I'm going to show you this in my journal, right? I marked this out as a sell model. You can see that here, right? We got inducement into that 5-minute change state delivery. It's not only a 1 hour for value gap, it's also a 1 hour for value gap in breaker block. And notice how it's in premium of this. So when we have a 1 hour key level, we want to align that with a 5-minute change state delivery, right? So 1 hour key levels align with 5-minute change state deliveries. Okay. Back to the other screen. So we were already in this higher time frame sell model, right? We have 5-minute change state delivery right here. And we essentially sweep this high into that change state delivery. So now at this point, I was already bearish, and on market open, what happens? There actually was an opportunity. Believe it or not, you might not believe this, but there was an opportunity. There was. I didn't see it in the moment, but if you measure out this price leg from premium to discount from here to here, you can see that this 5-minute gap is in premium. It's a very nicely placed gap in premium. And then if I drop down to the 30-second, you can see that we get an aligned time frame change state delivery right here. And you can just enter on the close, and this would be, obviously it's kind of scary to enter trades like this right on market open, but market open simply drives the market where it already wants to go. We already knew that it wanted to go down to this previous day's low, and that would be a 3-to-1, right? So once again, 5-minute gap in premium. 5-minute gap in premium. We align this with a 30-second change in state of delivery, and then straight down the previous day's low, and then we continue lower, right? And once again, where's the liquidity sweep? Because what do you need for a flow state? You need a liquidity sweep, a change state delivery, and a higher time frame key level and a line time frame change state delivery. Here's the liquidity sweep. Here's the higher time frame key level. Here's the aligned time frame change state delivery, and then we go lower. So let's talk about the trade that I actually took today, because that was kind of cool. So it was this. It was way later on in the day, where after we came up and then down and then back up. I'm gonna show my other screen. What I was thinking is, actually, let me map it out for you guys. Right? What was the trade I took? So I got a 3-to-1 today, which is really, really cool. That's like, really, really good trade. Very proud of it. And what it was a I had this 5-minute breaker marked out. So this down close candle from all the way over here. And that was my key level. And then it was kind of additional confluence was that this right here is also the first presented for value gap. So, just a little bit extra bonus credit that this was the first presented for value gap. And then what happens, right? We have this 5-minute key level. We have this first presented for value gap. And we get SMT with this high. And so with a 5-minute key level, you need 5-minute aligns with the 30-second. So 5-minute key level aligns with 30-second change state delivery. You can see that happens right there. So on that 30-second change state delivery, I enter short. I was super nervous. I wasn't sure if it was I had no idea for sure if it was going to work, but I thought it was worth the risk. And then my final TP was around there, and that was 3-to-1. So very, very cool trade. Once again, first presented for value gap was an additional confluence, 5-minute breaker, SMT, 30-second change state delivery. And we can I can show you this trade on this other screen here. Be 5 cons. Let's just try it. I was so nervous. Okay. I'll do and you can see that this ends up working out. So super happy about that. Very clean trade. I was definitely super nervous though, I'm not gonna lie. But what gave me additional confluence was that it was overlap with this first presented for value gap. And the reason I'm marking out this gap like this instead of like this is because this, I don't know, this is just kind of common sense, right? If there's a low here, the true gap is going to be from this low to this high. So, okay. Now, another trade that I almost took that I liked, I almost took this on demo, was, you guys may remember that I talk about a lot where we have the first presented for value gap. When we hit it, we want to be looking for 5-second change state deliveries off of it, because those are going to be very, very sensitive. And, well, we actually got that way earlier in the morning. I wasn't super sure at the time if it was going to work, so I didn't take it. But in hindsight, this was a really good trade. So we sweep this high here. So liquidity sweep. Once again, first presented for value gap. The first presented for value gap is a key level. So what aligns with the first presented for value gap? If it's a 1-minute key level, because the first presented for value gap is a 1-minute key level, so it's going to align with the 5-second, right? So there's the 5-second chance to delivery right there. And then we retest it. Boom. Stop above the high. And from here to here, if we measure that out, you can see how well we go to that 4th standard deviation. So that's pretty cool. So this was a trade that I was considering taking, and you can see that did end up hitting. So once again, first standard for value gap, which was right here, and then a line time frame change to delivery was the 5-second change to delivery down to the fourth standard deviation. So okay. Yeah, I think that about covers it. Oh, we'll talk about some trades on Twitter real quick. So a lot of people took this inversion. This is a pretty solid inversion, right? SMT inversion and straight down, and DNO took this. This was yeah, wow, 15,000. He made $15,000 just taking this. So very, very clean. It's the power of being selective. Unfortunately, Amos took the loss. You know, it's just part of the process, and yeah. But anyway, like I always say, guys, the market is always right, and there's always something we can learn. We just got to keep, you know, trying to learn from it. And in the long run, that is going to give us success. So, yeah, look at this. Right down to, what was this? All these lows. What are these? Low resistance. Why are these low resistance? Because look at how obviously they're forming a trend line, right? This is going to get ran through very aggressively later on. That's what happens, right? We run through old trend lines very aggressively later on, and you can see that's what happens. See, once again, at this time, right? At this time, this trend line was high resistance. And then once we finish our model, push into whatever, you know, I guess there's not a key level because there's we're at all-time highs, but usually there's going to be some kind of key level, and then we're going to get some aligned time frame change to delivery, and then we're going to go back and run through this. It was originally high resistance, now it becomes low resistance. So yeah, I think that about covers it. Oh, one last thing. The high of this, I thought this was super fascinating, right? You guys may remember the Phoenix model. The high of this, well, what was it, right? Once again, this was within the first percent for value gap. We had a 1 minute rejection block here. And SMT. So that's all we need for Phoenix model is SMT and a rejection block. That's literally it. That's all you need for Phoenix model. I made a video about the Phoenix model, and it was actually my kind of version of the Phoenix model, which is like a flow state version of it, where you take a change state delivery off of it. But the real Phoenix model is literally just, you know, entry on a rejection block with SMT, and that is literally it. And these will be super high RR. Now, personally, I would not take it like this. By the way, guys, this is the same model that Powell trades, right? He literally just enters at a rejection block with SMT. But the way I would take this is, you can see we have an old high here, and then we haven't tapped the midpoint yet. The way I would definitely consider this as a real trade is when we sweep this high into the midpoint. That's going to be a really, really high probability inducement. Once again, inducement is just like essentially a liquidity sweep into a key level, right? So liquidity sweep into the midpoint of this 1 minute rejection block. And so I call this the flow state mini, where you take it from the midpoint of the rejection block and with SMT, and then yeah, all the way we run all the way down. So I thought that was super cool, and yeah. Sorry guys, I'm a little tired today, but hopefully that all made sense. I'd anyway, I'd just rather get this out. I know this wasn't perfect. This video could have obviously been better, but where's the yeah. Obviously this video could have been better, but you know, I just want to keep one day at a time being consistent and uploading these every day. So I'll see you guys in the next one. Peace out.